You know, every December, investors start asking the exact same question. It's festive, sure, but it's also a serious one. Are we about to get a nice holiday surge, or is the market about to serve us all a big lump of coal? You've definitely heard the term Santa Claus Rally, but what does that classic stock market idea really mean for the wild 24/7 world of crypto?
So today, we're going to break it all down. We'll look at what the Santa Rally actually is, the psychology that drives it, and most importantly, what the data says about the clashing bull and bear cases for crypto as we head into the new year.
All right, first things first, let's get the definition right. A lot of people think the Santa Rally is just, a general market rise sometime in December, but it's actually way more specific than that. Yeah, the term was officially coined way back in 1972 by Yale Hirsch. And here's the key. It's not the whole month. It's a very precise 7-day window, and that distinction is absolutely crucial. And what's really wild is just how consistent this thing is in the traditional markets. Get this, the S&P 500 has gone up during this specific 7-day period about 80% of the time. That's a pretty reliable pattern. But the million-dollar question is, does that reliability carry over to crypto? So let's see how this all plays out in the crypto arena. Because with a market that never, ever sleeps, the story, as you can imagine, gets a whole lot more volatile. On the surface, it actually looks pretty good. Research from CoinGecko shows that the total crypto market cap has gone up in 8 of the last 10 years during that holiday window. So it seems like the party often extends to digital assets. But, and there's always a but in crypto, when you zoom in on just Bitcoin, the picture gets a lot more complicated. I mean, we've had some absolutely incredible years, like 2020 with a monster 34.5% gain. But then you have the coal years. The rally was a total no-show in 2022, and in 2021, Bitcoin actually dropped almost 8%. And this is a perfect illustration of the danger, right? Just assuming the rally is a sure thing is a great way to get burned. As market analyst already puts it, the recent data shows this negative trend that just traps traders who are banking on the seasonal story. So the main takeaway here, it is not guaranteed. Okay, so if it does happen, then why? What is it about the holidays that makes markets go up? Well, it all comes down to a really potent mix of human psychology and some simple market mechanics. There are basically 3 key ingredients for this potential holiday rally. First, the big institutional players. They're mostly on vacation. That leaves the market to us, the more optimistic retail crowd. Second, all that selling pressure from tax loss harvesting finally eases up. And third, the trading volume is super low over the holidays, which means it takes a lot less cash to move prices up. Let's just quickly define that second point because it is so important. Tax loss harvesting is just a fancy term for when investors sell their losing assets at the end of the year. Why? To lower the tax bill they have to pay on their winners. This creates a ton of selling pressure, especially in December. And this is where things get really interesting for crypto. See, for stocks, there's a wash sale rule that says you can't sell something for a loss and then buy it right back. You have to wait 30 days. But because the IRS classifies crypto as property, not a security, that rule doesn't apply. It's a massive loophole that lets crypto traders sell for a tax loss and then jump right back in, maybe even adding fuel to a rebound.
Okay, so with all that context, let's talk about the here and now, the battleground for late 2025. Because right now, analysts are completely divided. It is a real tug of war out there. So on one side, you have the bulls. You've got traders like Captain Faybeck who are looking at this long period where the price has just been stuck moving sideways. And they're arguing that it's coiling up, building energy for a huge move higher. And this isn't just a gut feeling. They're looking at technical chart patterns, specifically this bullish megaphone pattern that has a measured target of around $120,000 for Bitcoin. That would be a 34% rally from where we are now. The bull case also has some on-chain data to back it up. We're seeing CryptoQuant's regime score staying bullish, but not yet in the overheated danger zone. Open interest is climbing, which means new money is flowing into the market. And on top of that, funding rates are going up, which tells us traders are literally paying extra to bet on prices going higher. They're putting their money where their mouth is. But let's not get carried away. The bears have a very, very strong counterargument. They're looking up and seeing a massive supply wall. Basically, a huge number of investors who bought at higher prices are just waiting to sell the second the price gets back to where they bought in. And that could stop any rally dead in its tracks. And we just saw a perfect example of this play out. Bitcoin surged past $90,000 only to have that entire move completely wiped out in minutes. It just goes to show you how fragile this market is and how fast sellers are jumping in to crush any sign of a rally. So you might be wondering, why are we so focused on just one 7-day period? Well, it's because this is about more than just a quick holiday gain. A lot of people watch this rally, or the lack of one, as a powerful indicator for the entire year to come.
This brings us to a really interesting idea called the Grinch effect. And yeah, it's pretty much what it sounds like. The theory is that if Santa doesn't show up to deliver a rally, the Grinch does, and the market tends to have a much tougher time the following year.
And the numbers here are pretty eye-opening. In years when the Santa rally actually happens, the stock market goes on to average about a 10.4% gain. But in the years when it fails, that average gain plummets to just 4.1%. It really does act like a barometer for how investors are feeling heading into the new year.
Which, of course, leaves us all with the ultimate question as we watch the charts this holiday season. Are we looking at a setup for a fantastic new year? A holiday wish list coming true? Or is the market trying to give us an early warning from the Grinch? The next few days might just give us a huge clue.